Shares of Google down more than 3% after missing on the top and bottom lines. Is it really as bad as all that? Scott Kessler from S&P Capital IQ is here to tell us. I guess we'll just cut right into it. Is it bad as all that at Google? It didn't seem all that horrible once you dug into it.
Right. I don't know if I'd say that the results were horrible, but they do speak to a couple of broader issues that people even seem to either not know much about or care much about. Google definitely has done very well over the last couple of months. We think in part as folks have been thinking about large cap, growth oriented technology names to allocate capital to in the wake of Apple's decline. And Google, we think, has benefited, but to some extent, people sometimes don't appreciate the fact that there are risks with that name as well.
Well, I get it that there's high expectations going in, but a lot of the stuff that people are talking about doesn't ring true to me. I mean, the cost per clicks, everyone's ululating all over that, but it fell 6% because we're picking up on mobile devices. Now, Google's not Facebook. They're not trying to reinvent the wheel on mobile devices. Isn't the company really just transitioning from getting a lot on your desktop clicks to less money per click on a ton of different devices?
Well, I think that's a fair point, but I think what some people might have been concerned about is the trend. The trend in terms of CPCs had actually been improving sequentially for the prior 4 quarters. It's just now we saw it going from a decline of 4% in Q1 to a decline of 6% in Q2. So that, I think, took some people by surprise because, again, it broke that improving trend that had been in place really for a year.
Is that a function of weak pricing or just an acceleration in mobile devices?
I think perhaps a little of both. You know, Google tends to be kind of circumspect when it comes to directly answering certain questions. I think it's fair to say, though, that your point about just more people using mobile greater amounts of time, that probably contributed. And also the fact that people are to some extent worried about overall pricing when it comes to advertising. And we're not entirely sure where that stands. Our indications are that pricing has been pretty stable. So yet another indication that maybe not all is as well as people might have thought.
So is this thing a sell here? We're down some 3%, give or take. We were down 6% after hours last night. Should I bail here? The stock, we still have some gains to protect, but again, it doesn't seem like the momentum, at least from the fundamental side, is broken. What do I do with the stock right here, right now?
Right. So we have a hold opinion on the stock, which, albeit is boring, is how we think about shares right now. We expect Google to be a market performer over the next 12 months. Our 12-month target price is $950. So that obviously allows for some upside, but we're not as bullish as some calling for $1,000 plus target prices that we saw a couple of prior to the print last night. The reality for Google is as follows. We think strong fundamentals in the business, but the valuation largely reflects that. We've been talking about risk not only related to mobile in terms of things like CPCs, but also think about Motorola. Motorola, since the company acquired it last May, has accumulated $1.7 billion in operating losses. We don't know if it makes a whole heck of a lot of sense for the company to own Motorola, and we'd also point out that it creates a lot of tension potentially with OEM partners on the Android side. In addition, it always seems like there's another kind of legal or regulatory issue around the corner. That's something that we don't think people account for when they consider the risk profile for the company.
All right, it's neither a buy nor a sell. It's just kind of a meh. Scott Kessler from S&P Capital IQ.